we're not quite at the point where you expect to have follow through in this market if it starts to rally, short-term trading. We are at the point where the dumbest money, and I say they're not dumb, they're just shallow pocketed. I'm the dumbest money, right? Starts to pile in on the short side. Good afternoon. It's 1 p.m. We're recording at 10 a.m. Eastern Time. This is the Arcadia Economic SilverFix. I'm Vince Lanci, your host, on behalf of Chris Marcus and the rest of the Arcadia team. Today, we have a big week ahead of us in terms of trading. Doesn't necessarily translate in a big week for stackers or people who care about that. But we want to go through this because an opportunity could really come up this week. Really come up. You've got two events. Then we'll go through the week quickly. You've got the BRICS meeting from the 22nd through the 24th. Call it the 22nd through the 25th. Based on U.S. calendar, 22nd at midnight, 25th, that type of thing. You've got Jackson Hole, right? So Jackson Hole is going to start on Friday, and that'll make it for a long week. Traders won't be going home early. What I'd like to do is go over quickly three things. I did a lot of content on silver this week. And so I'm going to, rather than start from scratch, I'm going to give you some important things that I think we should all be focusing on with regards to silver. Not so much the price is going to go up or the price is going to go down, but regards to its role in the big picture, and how the markets have been kind of how market structure manipulates silver. All right, so we're going to go through the following very quickly. Silver Eagle comment. Michael Lynch of the DGens put out a very nice little analytical piece drilling down into the backstory on why American Silver Eagles are so expensive. And when he did that, he triggered something that we knew about, but we're missing that final piece, the BlackRock piece. And well, we have a nice story on that for you if you want to see how, not why, how the market is cooked against price going up. And if price does go up, it goes up for you, the buyer, not for them, the manufacturer. They pass it on through legitimate and nefarious ways. Second thing I want to comment on is the silver market. We are in a bottoming process now, and you're going to start seeing the dealers are getting long, they're less short, and those are reasons to be bullish. Yeah, okay, yes, I'm not going to pour water on that, but I'm going to say it is time to pay attention. It is not time to, shoot all your bullets. And then I want to touch on the BRICS comment, and I figured out how to use YouTube. And I say that because that's for everyone's benefit, not for my benefit. I'm going to I did a 2-hour conversation yesterday on gold, and then on the BRICS history and what's going to happen or why it's going to happen. What could happen. All right, so quick and to the point, the Silver Eagle comment. All right, the whole story on Silver Eagle premiums. Silver Eagle premiums, I'm really not going to do Michael's work justice here, but I want to touch on it. The Silver Eagle premiums went up because demand outstripped supply. And supply went down because the Department of Treasury stopped making them when they should. Now, there is a mandate to satisfy demand with supply. And, if you're a strict interpreter of the law, you could say that the Department of Treasury was remiss or negligent in their duty. And you'd be right. But the reality of it is the law was rewritten, and they now have this discretion to decide what is and what isn't in the market's best. They have all the discretion. It's like, they have the final say on their own on what the actual marketplace says. So it's cooked. That's cooked. That's the marketplace being cooked. Michael noticed that. Michael did some work on that about, 2-3 months ago. And then he did a little more drilling into it, pardon the pun, and he found out that BlackRock, which controls the SLB contract, and also a fabricator in the U.S. May be involved directly or indirectly, intentionally or coincidentally, in the price being kept at a certain level and letting the differential, the real price, be expressed in the premium in the American Service Eagles. So the coin really was the price of silver. You know what I mean? And the price of silver was being kept down, and et cetera, et cetera. And you can look at it any way you want to. But the bottom line is price discovery comes out in the long run. And when people in charge can't control the price from coming out, they seek to push it off of them. And so companies like BlackRock are passing their cost on to you. See how that works? They're just doing it in a way that's probably very questionable. All right, so that's a bad summary of what he wrote there. But I want you to know that, and I'll give you this as well. I want you to know this started in 2020. In March 2020, during COVID, metal refiners in the EU were a lot of them were in Northern Italy, and they had to shut down because of COVID, whether they wanted to or not. And at the same time, the U.S., the Department of Treasury, right, was stocking up on silver for coin demand. And the thing is, the coin that the U.S. uses, the government uses, has to be U.S. Silver. But really what it's sourced over in London, because that's where the refiners are. And so the refiners shut down. They couldn't get the silver over here fast enough. And you had that disastrous backwardation in silver and gold in the futures. Anyway, long story short, the Department of Treasury did this. And so I'm telling you that that's why they backed off on future supply, but they did not recognize, they weren't thinking about demand and supply economically. They're not economists. They're morons, or worse, they're not morons. They don't care. So supply and demand, they restricted supply because they thought if we don't make it, there won't be demand and the price won't go up. Got it? That's what happened, right? But that's because they were ignoring demand. And the demand side said, no, we want it. The demand's not going away. And so the existing Eagles went up in price. Now, there was other stuff going on. Refiners and smelters and blank makers and wholesalers were all kind of gouging things a little bit. And they probably still are. But the bottom line is the Eagles weren't readily available, and supply was greatly diminished for 2023. And that's going to change. So what happened? What happened? Well, Eagle prices reflect the real price of silver. I mean, minus a couple of dollars, and the futures market remained subdued. So the government's like, duh, the price of silver is fine. Look at the market, and then the public, like Michael and the degens, are like, dude, we're paying $10 over for Eagles. This is ridiculous. And the government doesn't hear the public. The government only hears what the corporations say to them. And the corporations say, silver's okay. Silver's fine. Look at the price. It's fine, right? But that's because they're making the money at the refinery level, selling at the higher premium. So the government feels like they're doing their job, right? The public is getting fucked as usual. And the middleman, the refiner in this case, or the blank maker, or maybe or the smelter, or whatever term we're using now, that person is profiting. That's how it works. Okay, so I wrote a whole article on this, and I go through the history of it, but I wanted to convey that to you. That's called market structure. That at each segment of the market, the supply chain, right? At each segment of the supply chain, there's a toll booth, or an intersection, or potential friction. And whoever controls that toll booth determines price. And that's what happened. And final note, to not be so I'm not anti-American Silver Eagles. Silver Eagles and Royal Canadian Maples should trade at a premium to everything else, your beloved Buffaloes, your Spider-Man coins. I don't care. And the reason for that is because they are globally recognized. And the reason they traded a premium is not because it's better silver. It's not, it's called liquidity premium. If you need to sell your silver and you have American Eagles and you have RCMs, you're going to be able to trade it right away and get out. I need to sell it. Here it is. The guys go, oh yeah, I know that. He's going to do it. But if you go to them with a more numismatic type of product, yes, it's worth the silver and maybe more because of the rarity of it. But it's not so easy to liquidate because people are like, oh, I haven't seen one of these in a while. Let me check in my book. And they, they give you, lowball you, and that's how it works. That's why Eagles and RCMs should trade at a premium. So when Eagles were spiking, I knew that something was wrong because of the story I just told you. But I also said to myself, you know what? Maybe this won't come back. And so I bought a monster box a couple of years ago when it started happening. I bought RCMs $4 over spot. When Eagles were $10 over spot, I'm like, this is stupid. RCMs and Eagles are almost the same thing in terms of the liquidity premium. They're not the same thing in terms of price. I said, you know what, I'm going to buy RCMs. Anyway, so that's basically it. Keep that in mind. Second thing, silver market comment. I'll make short work of this. The silver market comment, we're at a place we were last time, a year before. You have a marketplace that is setting up for a vicious spike higher. Ridiculous, but we're not there yet. Now, we could get a spike higher, but that won't be it. The vicious spike higher comes for this reason. Comes because between August and the end of October, investment funds, hedge funds, passive investors tend to be biased to sell precious metals and stocks. And they do that to raise money for taxes. This is how early they do it. And even when they're not selling, there's no new money coming in to buy. And so the market is kind of weighed on. When that starts to happen, like it did last year in April, but it started happening in April because of the Fed. When that started to happen last year in August, for silver and gold, the market starts to drop. And then the wildebeests, the salmon, the sheep start to get in, and that's the CTAs. It's going down. Because it's going down, it's going to go down more, therefore I sell it. And they start to sell it. Now, if you remember last year, and I may have actually broadcast this with you guys last year, at least indirectly. Last year, the market got to a low, and then the market stabilized, and then the shorts just kept selling and selling and selling and pushing it down, but the EFP went up. And that's because this is about the time the coin blank buyer was there. The coin buyer was there last year. And the physical side was like, we're just buying it. So they were buying it at a price on the physical side higher than where the futures were trading, which is the definition of a short-term broken market, and can resolve into a short squeeze. It resolved into a short covering rally, not a short squeeze. So how did it resolve? This is what happened last year. You had three little ones. You had starting in like September, you had one that went up. You had a nasty rally, like $2, and it backed off. $2, back up. Happened 3 times. And then November came around and we had the big one. And that's why we got up to a decent relative value again. So what I'm saying to you now is we're not quite there. Let me put up the picture. All right. We're not quite at the point where you expect to have follow through in this market if it starts to rally, short-term trading. We are at the point where the dumbest money, and I say they're not dumb, they're just shallow pocketed. I'm the dumbest money, right? Starts to pile in on the short side. So to go back, so if you look at this here, it's like, see how you have shorts getting in 42,800, they add 2,300, that's shorts getting in, right? And now you see that means the market is going to go down because shorts hit the bid. Forget the commercials, for crying out loud. Please forget the commercials. It's a great sales pitch, but it doesn't matter. On this, at least for the most part. But I want you to know that it's not done until the longs on the non-commercial side stop selling and start buying dips. And they're not buying dips yet. These guys are buying dips, the long commercials. That's good, but it doesn't mean much. We're getting to a point now on my radar, on my trading radar, that if the EFP starts to flip again, if you see spot market go over futures, then get ready for the rally. And if it happens in November, get ready for the monster rally. Monster rally, monster box, monster silver. That's it. Keep your powder dry. Here's the notes on that. This is what last year in May, this is what I said. Silver CTAs are too long, do not buy. September, silver is getting ready. September 22nd, silver short covering is coming. And then it just started to happen. If I have that chart here. Yeah, here we go. So here we go. May, people are like, should we buy the dip? I'm like, no, don't buy the dip, right? So here's your first spike higher. I think Craig Henke was talking about these sort of things. First spike higher, second spike higher, third spike higher, we're off to the races. The third spike was during buy season. So these were short covering rallies that got stomped on. And this was a short covering rally that ended up being a true investment demand before this sell-off and then a resumption. So that's it. I'll see this little picture here. I'm going to show this to you. I left this up here as a memorial. Remember, when the market made those highs, that night, February 2nd, 4:59 a.m., JP Morgan downgraded the whole mining sector in Europe. Shockingly, out of nowhere, the price of silver went back down. Now, why are they manipulating the price of silver lower? I'll tell you why. I'll tell you why they're manipulating the price of silver lower. Because they have real customers that are buying it, and they want to buy it as low as possible. So they're keeping the price lower. It's not just for them. It's for their customers. And one of their customers is China. China is hoarding silver. That's it. That's simple. Next thing. BRICS is this week. I'm not going to talk too much about it, but I'm going to give Chris like 45 minutes on it, describing, what's going to happen with the BRICS event. One of three things can happen. I'm going to give you all three of those things. Not now. I'm going to give you in the recording. It's just too long to get into here. How the BRICS love affair with commodities and precious metals started. It started in 2017. I'll give you the data on that. How it progressed, why the US is not trusted anymore, why China is being trusted, and it's the whole story. And the timeline, without being boring, hopefully. And then the BRICS using their trades between Russia and China as a template for what they're going to do next, which will be either a coin. It's not going to be a coin. If it is, I'll be shocked, right? An accounting ledger that uses gold and eventually silver and bonds and other things that are permanent in nature, so they can use for sleeving credit as an accounting tool using blockchain and precious metals. That's the second way. Or the third way is doing nothing and just settling in currencies, or using a basket of commodities with currencies, which is very difficult. And they may be able to do that in the long run, but not in the short run. All right, I'm Vince. I'm going to give that piece to Chris. Keep the faith. We are in sell season now. So if you're a speculator or you're watching price, if you're not buying or you're not selling, you don't care, just watch what I'm telling you and watch the market and say, oh, it's down. I'm not surprised. That's what Vince said. Or the EFP flips. I tell you, market goes up, so the market's up. The point is, there's a story out there that no one's telling you, and we're telling you that story. Whether you act on it or not is up to you, but this is the truth. Have a great day.